Hello everyone, welcome to today's Oil Trading 101. Today I will be sharing about the general information regarding the crude oil and give you a general picture on how to trade the crude oil with points. First of all, just a brief introduction about the PhillipCapital as every webinar will do lah. So we are an integrated Asia financial house with a growing global expenses in terms of the financial services. And we are now having offices in financial hub of 15 countries and we are expanding now. So today, for us, we will start with an introduction on the crude oil and fundamental information. Then we will introduce the factors that will affect the oil price. Later, we will also discuss about the black swan event last year, which is the negative oil future price in the April, the May contract, basically May 2020 negative negative oil future price. Last but not least, Phillips CFD has launched the new products on the US and the UK, so I will be introduced a little bit about the product information as well as the current promotion ongoing. So, why do we need to trade crude oil? We have a lot of commodities, and if you look into the current commodities market, crude oil is a big portion of the commodities trading. For WTI and the Brent, these are the two main benchmarks of the crude oil, and they account for around 15% of the whole commodities market. The gas oil, gasoline, and other energy products are also produced from crude oil, which we will give you a brief introduction. So we can see here, actually, the whole gray part is called an energy part. Most of them comes from the crude oil, means crude oil is a raw material, and any of the oil products, the demand from any of the oil products will also affect the demand of the crude oil, and we will also talk about it later. So when we talk about crude oil, right, what kind of daily energy you will be thinking about? You may type your answer in the chat. So when we talk about crude oil, so in our daily life, we don't normally use crude oil directly. So what kind of products actually we use, in our daily life? Anyone can give me any ideas? You can type the answers in the chat lah, or in the Q&A also can. Yeah, actually I saw several answers, right? And a lot of people mention the most it's most familiar one is the petroleum for our cars. Yeah, because of this concept, like this stereotype, a lot of people may thought that the EV car, electric vehicle car, would have a big impact on the crude oil itself. However, it is not fully true because the gasoline is just one product from the crude oil. So there are different products produced by crude oil, and this slide will show the key products. The main categories actually is defined by the different temperature during the refinery. So consider this whole as a refinery machine, and we will know that the lightest product actually is a gas, and followed by the gasoline, which is a petrol oil for our cars, and the kerosene, and also the diesel oil, fuel oil, as well as a residue. So for the gas wise, it's normally what we call is LPG, liquefied petroleum gas, during our daily life. Gasoline is also same as we are familiar, is for our car. But for the next several is for the big transportations. Also, the electrical cars may reduce the demand for the gasoline. The other oil products are still the main energy for the respective transportations, and currently based on the technology, they are quite hard to change because of the high storage cost. So for jet, trunk and tray, and the bunker, right? For these three main transportation for for long distance transportation, it's hard for them to change from the oil to another cleaner energy, because currently the storage during the transportation is will cost very high expenses, and oil is one of the cheapest choice for those transportations. So after we understand this quite fundamental knowledge about the crude oil and its products, we need to understand about WTI and the Brent. So WTI and the Brent are the main benchmarks for the for the crude oil, and there are also have other ones which I will introduce later, just shortly. But WTI and the Brent is very important. So WTI stands for West Texas Intermediate. The differences between WTI and the Brent are five main sectors. First of all is the refining location. So for WTI, it's mainly in the United States and in Texas. And in Texas and the North Dakota, when the oil extracted and it will be transported by pipeline to Cushing, Oklahoma. And the Brent or crude oil actually contains a small amount of the light sweet crude oil produced by the North Sea. And normally people will refer them as BFOE. So basically this is one of the main differences between WTI and the Brent. Then another one is the geopolitics. So for the geopolitics change, for example, fluctuations in the political system of the oil producing countries, or I believe many of you heard about the OPEC, right? So the OPEC strategy, increase or reduction of the oil production level, such geopolitical changes have a huge impact on the oil price. So for WTI, investors may mainly pay attention to US policies, but it does not mean that you don't need to pay attention to other geopolitics. But it's for WTI, you can focus more on the US one, while the OPEC policy is one major factor for Brent. So currently, for US crude oil is mainly WTI, but for Brent oil price is mainly for the two-thirds of the oil price in other part of the world. Another main differences is in the perspective of the crude oil composition. So there's a big difference between these two kinds, which is mainly reflected in the API gravity and the sulfur content. So why is it very important? Because the higher the sulfur is, actually the more it will cause more pollution. The sulfur content of the WTI crude oil is 0.24%, and the sulfur content of Brent crude oil is 0.37%. The lower the sulfur content, the lighter the oil is, and the easier it is to refine. And currently for WTI and Brent, both of them are considered as low sulfur crude oils. And the API index of international crude oil lightness, the range is from 10 to 70. So if the API index is higher than 10, right, it means that the crude oil can float on the water. And if it is lower than 10, it will sink underwater. The API of WTI crude oil is 39.6, and the API of Brent crude oil is 38. So from this perspective, both Brent crude oil and the WTI are relatively light crude oils. Why do I talk about the high sulfur content? Because the last year, the International Maritime Organization, which we normally call it as IMO, this organization requires that the sulfur content of fuel oil used by global ships So it's on the sea trading, basically for those ships, shall not exceed 0.5%. So with the implementation of this regulation, the demand for the light crude oil may increase. And actually, the demand for the HSFO, which is high sulfur fuel oil, has been gradually decreasing. So how they implement this regulation is, if you want to use the oil, the oil with a sulfur content higher than 0.5%, they will impose more tax, which the reason why the ships want to use a high sulfur fuel oil because it's cheap. However, with these regulations, the organization will impose more tax in terms of the shipment. In this case, the sh- sh- the sh- the ship company will be more willing to use source like a WTI and WTI and the Brent, those fuel oil produced from WTI and the Brent. So globally, crude oil producing countries mainly includes, first of all, OPEC members, which is leading by Saudi Arabia, and also like Russia and the United States. And for crude oil consumers are mainly developed countries such as United States, European and Japan, and the developing countries such as China and India. So actually, a lot of people may be curious about why Japan is still in the top oil consumer. Actually, because previously Japan was trying to transfer from oil into nuclear power. However, because of the incident, we all know about it. So actually, they have stopped this plan and still stick to the oil consumption. So when we talk about the oil globe map, right? As I mentioned just now, the OPEC OPEC is a leading participant you can never ignore. What is OPEC? So OPEC stands for Organization of Petroleum Exporting Countries. Yeah, this is exporting countries, not consumption countries. It is an intergovernmental organization founded in 1960. So many of these OPEC countries are large oil producing countries, including Saudi Arabia, Iran, Iraq, Venezuela, Nigeria, and so on. And what is most important is that 38% of the oil production comes from OPEC member countries, while actually OPEC contribute to 70% of global oil inventory. So within the OPEC, right, most countries, the national income of them mainly comes from the crude oil. The most famous example is the Saudi Arabia. So it is a country-owned company which hit the world's biggest IPO in 2019. Therefore, the purpose of this establishment of OPEC actually is trying to ensure that oil prices remain at a relatively stable level by increasing or reducing crude oil production in order to maintain the P basically it maintains the P&L of the government financial out of the government financial situation. So besides OPEC, recently in the recent years we have heard about new word called OPEC Plus. So what is OPEC Plus? OPEC Plus actually refer to OPEC and the non-OPEC countries who have an agreement among each other. So for example, in 2020, so OPEC Plus are mainly OPEC and Russia, and as they were discussing about the production cut. Other than the WTI and the Brent, there are another two crude oil benchmarks, which is Dubai crude oil and the Shanghai crude oil. But currently, this is only like a regional benchmark. So this is only a regional benchmark, and for international crude oil wise, we better to refer to Brent and the WTI. So in terms of this, right, you guys should be understand a little bit about the global map of this crude oil, and now we can come to the oil price history. So people may ask, what are the factors that affect the crude oil price? First of all, I need to make so normally for WTI and the Brent, these two, right, will have a positive correlation, which means if an event can trigger crude oil price increase, WTI and the Brent price will normally increase together. So in this case, later, actually I will show the WTI price as an example to introduce the factors that will affect the crude oil price. So let's take a look at WTI price history. We can see some critical change comes from macroeconomy and government policies. Therefore, based on this chart, right, can anyone tell me what are the factors you think in terms of what are the factors you think about from this chart can affect the oil price? You can also type your answer in the chat lah. There's no right or wrong answer because a lot of factors actually can affect the oil price. But we only based on this chart, what are the main factors that will influence the oil price a lot? Yeah, I saw some answers. Stock market crash. Interesting. Stock market crash. US pandemic. Actually, from this chart, right, I believe most of you can will roughly know what kind of factors what kind of factors we need to look into. But when we summarize the key factors, right, normally we come into these two parts. So the first part is called supply and the demand. So basically, supply and demand is a very economic theories, and it is very economic. It is very, I would like to say, it stick to the what we learn about economy. So it's supply and demand. You need to find the balance. Is a third thing. Then another category is called financial market. So in terms of financial market, actually I saw someone write about it's the stock market crash. However, for the oil price, it's more towards the future market. Because in terms of a stock market, it's a little for future, it will influence a lot. And later I will explain about the future part. So first of all, let's look at the supply part first. So in terms of supply, of course, we will mainly look at the OPEC, and just now I saw people mention about the OPEC supply cut and also interruption. So actually, in the past few years, right, there are active fluctuations on the supply side managed by OPEC. So for example, in the 2016, Russia and OPEC jointly cut production to reduce the supply of crude oil on the market, which caused a 9% in the oil price. Since then, with Libya's supply interruption, Venezuela's passive production cuts, and Iran's sanctions, supply side fluctuations pushed oil price up. Meanwhile, other than the production, right, there's another very important data we need to look at is OPEC inventory. Because as I mentioned just now, around 70% of the oil inventory in the world are coming from OPEC inventory. So it is generally believed that if other conditions remain unchanged, the increase in inventory is bad for crude oil price because as there is no further demand, the more inventory it is, the more supplies the market will have in the future, right? Other than these two, inventory and production from the OPEC, we also need to look at about non-OPEC production. But normally for non-OPEC production, it only follows the demand and supply theory. And typically we focus a lot on OPEC, but not really non-OPEC. But in terms of the specific details analysis, you can also take non-OPEC into considerations. But as the normal investor who would like to trade in the oil who would like to trade in the crude oil, pay attention to all the OPEC production and the inventory data, which actually you can search online. So another one is demand side. For the demand side, right, the growth of the global economy will affect the price of crude oil by changing the demand in the crude oil market. And actually, I saw some people mention about this. Yes, the actually the economic growth and the growth of oil demand have a strong positive correlation. And the proportional relationship between them is generally the elasticity coefficient of the crude oil consumption to GDP. However, changes in the economic growth rates can not only be used to explain the mid to long-term increase in oil price, but the decline in oil prices caused by a short-term economic recession can also be seen in the changes in the economic data. So when we see about the economic growth, right, we also should see into two different factors. One is called non-OECD countries. So in terms of these countries, right, the economic growth is the main drivers of the increase of the oil consumption. However, if you look into the OECD country, which most of which are developed countries lah. So they have a very stable consumptions, even in economic growth. And currently, we all know that for the consumption alternatives, in terms of the petrol, there's a EV car which may have a little bit effect on the oil. I would like to say oil demand in terms of the developed countries and basically in the OECD countries. But if you look into India and China, right, the economic growth are still driving the increase of the oil consumption, which we can see is in this year's data. So it's with the recovery of the economy from China and other recovery from the epidemic in China, the demand of the oil actually increased quite a lot. Thus, this recovery triggered the oil price increase. So in addition to the general commodity attributes, which is supply and demand, crude oil also has the attributes of strategic materials. So what is strategic materials? This is like the main revenue generation from the country. So its price and supply are largely affected by the political forces and the political situations. In the recent years, with the development of political multipolarization, economic globalization, and the production internationalization, competition for the crude oil resources and the control of the crude oil market has become very, very important reason for the turmoil in the oil market and the soaring oil prices. Tight geopolitics have strengthened the international crude oil market's expectations of supply contraction. And other than the emergencies like wars, right? Other than this factor, the climate conditions will affect the supply and the demand of crude oil also. Just now, I no one mentioned about climate conditions, but this is one of the factors for the short term. So for example, right, abnormal weather may cause damage to the crude oil production facilities and cause supply interruptions, thereby affecting international oil prices. But such abnormal weather, its impact on the entire international oil price is still short term. So in addition, many countries in Europe and the United States use crude oil as a heating fuel. Therefore, when the climate changes abnormally, it will cause short-term changes in fuel oil demand, which will lead to changes in the price of crude oil and other oil products. This is how climate conditions will affect the crude oil price, but just let you know, it is for the short-term wise, it is not for long-term wise. So other than these conditions, we need to talk about the financial markets. The first one we need to talk about is the future price. We all know oil future is very popular. Some institutions use it. Some institutions use it to hedge, and some institutions use it to just do future trading, right? So future price is an important factor which may affect the oil price. When the futures price is much higher than the spot price, crude oil companies tend to increase commercial inventories and then reduce the current supply, thereby stimulating the rise in the spot prices, and the spot price spread of futures decreases. And it is the same as when the future price is lower than the spot price. Crude oil companies tend to reduce commercial inventories, increasing the current supply and leading to a drop in the spot prices and forming a reasonable spread with futures and the prices. So what we need to pay attention to is the spread between the spot price and the future price. Meanwhile, US dollar is also an important thing we need to look at. So as international crude oil transactions are mainly priced in USD, US dollar, right? The US dollar exchange rate is also one of the important factors affecting the rise and fall of crude oil prices. When the US dollar appreciates, the international price of commodities will be under downward pressure. Conversely, when the US dollar depreciates, the prices of such commodities will rise. This is how USD will affect. However, there's another thing in terms of USD, I would like to mention about is, however, the impact of the dollar exchange rate factor on the oil price is only temporarily and not really significant for mid-term or even short-term. So statistical analysis shows that the correlation coefficient between the WTI crude oil future price and the USD dollar index, right, is only negative 0.22, which shows that in oil price fluctuations, the US dollar exchange rate plays a relatively small role in relation to the supply and the demand relationship of crude oil. But if you only do the paper trading, right, you should also pay attention to the USD depreciation or appreciation. So after we talk about these factors that will affect the crude oil, we must talk about the black swan event, which is the negative future price. I believe everyone heard about this price, even you are not trading oil, even you are not really doing trading, but at that time, the news is like everywhere. So in terms of this, right, anyone knows what is the reason for this negative price? And what does this negative price mean? You can type your ideas in the chat or in the Q&A. Yeah. So first of all, right, the negative price is in terms of the future price. We need to be clear about this. Yeah, okay. Actually, the contract that fell sharply below zero is the May 2020 WTI future, which expired on 21st April. The plunge in the oil prices is it's a very surprising event, but over of oversupply in the oil market. Okay, so the situation is right. OPEC major oil producing countries and Russia, they would plan to start the production cut from May 1st, 2020. However, affected by the COVID epidemic, the sharp decline in the demand led to a surge in the stocks and a severe imbalance between market supply and the demand. The negative oil prices mean that the cost of transporting oil to refineries or storage has exceeded the value of the oil itself. And actually, within this price, many small and medium-sized oil companies would face a risk of bankruptcy. This negative future price triggered further production cuts and actually the 5 month future contracts prices increased. So a lot of people may think this negative oil price is a bad thing. Actually, it's not. As I mentioned just now, with this negative price, the OPEC as well as the Russia, right? They faster the production cut. Actually, after this negative, the 5 month future oil price increased quite a lot in the June and the July and the August. And currently, in this year, right, crude oil price showed a very strong rising trend. And with the decision that OPEC Plus keeps production largely steady, has pushed crude oil futures further up. Since the beginning of the February, international crude oil prices have increased rapidly, and last week, OPEC and its oil producing countries said the group will keep production largely steady through April, except that Russia will be allowed to increase production by 130,000 barrels per day. So for us, right, this year, the economic recovery from the previous epidemic actually is one of the main factors that boost the oil price increase. And we may expect the oil price to maintain at a very stable level and increase further. For us, right, for Phillip Future, on 1st March, we have officially launched the UK and the US Oil CFD product. So for UK Oil CFD, is based on the Brent price, and the US Oil CFD is based on the WTI. For each product, we offer USD 100 and USD $1 contract per lot, and the margin requirement is 20%. If you want to know more information regarding the crude oil, right, you can scan the QR code to understand more. There's a market journal write about the crude oil situation currently. So there is one oil CFD promotion ongoing. From the March 1st to the end of the May, if you trade 1,000 oil CFD contracts, no matter you trade the 100 US dollar contract or the USD 1 contract, right? As long as you trade 1,000 oil CFD contracts or more, you will be able to get 100 watts of petrol voucher. Terms and conditions apply, of course. And meanwhile, for CFD itself, we are also having this SGD 88 promotion. So it's for the 1st of Jan 2021 to the end of the March. You may enjoy up to 88 Singapore dollar for the commission generated from eligible CFD products. And also recently, I have introduced this in my previous webinar also in terms of the Hong Kong economy. So we also launched for the Hong Kong mini contract CFD. Unlike Hong Kong equity, right? For Hong Kong equity, you need to buy a full lot, which sometimes will spend a lot of money. For the Hong Kong mini contract CFD, you can trade from one share on the selected counter. You may also scan the QR code to know more information about this Hong Kong mini contract CFD promotion. So if you want to open a CFD account, first off, if you want to trade CFD, you need to pass the CAR. This is under MAS regulations. If you fail to pass the CAR, you can go to the SIP website to do the e-learning to understand more about this product, and we can assist you to proceed the CAR. And also for open an account, you can just scan here to open a Cash Plus account with a CFD account. So the account number will be the same and proceed to trade CFD as well as stocks. Yeah, this is what I plan to share now. Thanks for listening. So next we will open to Q&A. So I saw some people mention about the share oil, right? The share oil in the USD, the share oil in the USA, actually many people also have this idea that the share oil will affect the crude price, oil price. Yes, it is definitely, but for the share oil production, all the facilities, right? They are driven by the crude oil. Means for the share oils, they need the crude oil for US the refinery or extraction facilities. They need the crude oil to extract the share oil in USA. That's why for share oil, they need crude oil stable at a certain price so they can try to manage the cost. Otherwise, for share oil in the USA, there are a lot of medium-sized share oil in the USA, and normally when the crude oil crash, right, a lot of share oil medium-sized company also will go bankruptcy if you look into the history data. And when the crude oil price increase, there will be more share oil companies in USA appearing. So this like a very, I would like to say it is a very strange relationship between the share oil and the crude oil. But the thing is, the share oil also need the support from the crude oil. Yeah. Okay, so in terms of the Cash Plus account, right? Okay, so if you want to trade CFD, right, you need to transfer in money actually before we trade. So because for the CFD, you have a margin requirement. If you see under this product information, you will be seeing there's a margin 20%. So means you need 20 your money can be used up to 5 times lah, but you need to transfer in money to be able to trade the oil CFD. Yeah, you guys can type your question in the Q&A. If you have any questions, you can type in the Q&A and we will proceed to answer. Okay, so for the CFD oil contract, right, there will be no expiry date. For the CFD product, there's no expiry date. It will do auto rollover every month, but for the CFD contract, right, there's no expiry date. Okay, so how much is the 1,000 contracts? It doesn't matter. You can trade USD $1 CFD UK or US oil for 1,000 contract, or you also can trade the USD 100 for UK or US CFD contract or of CFD contract to be qualified for the 100 petrol voucher. So it's no matter which oil CFD you trade, as long as you trade more than 1,000 contracts, right? You will be qualified for the 100 petrol voucher. For me, actually, I look into the UK oil more often. I would like to say I look into the UK oil more often because I look into the Brent more often. That's the point. But the thing is, for as I mentioned in the previous section, I say for US and UK, basically it's Brent and WTI, right? Their price trend are quite similar. So for demand and the supply, for the global demand and the supply, it will affect the WTI and the Brent together. So personally, I do look in focus on the UK oil because for UK oil, when you look into the OPEC, especially the political situation, then a lot of other OPEC things, you are busy more correlated to the Brent price. Yeah, okay. So for the promotion wise, actually you can scan the QR code to see lah. There's more details on the website. Okay, so actually because of for the future oil price rise, because of the COVID situation and the oil actually they cut production a lot. So in terms of this year, right, the demand is increasing in terms of the recovery of the economy. However, the inventory in the last year actually increased a lot. So means supply and the demand is relatively balanced. But I would like to say, this year actually the oil price increased quite a lot. Then quite stable in terms of the range of 60 to 80 lah. But it's hard for the oil price to back to the 80 USD dollar age. Currently, it's a 60 around 60 to around 60. This price is a quite stable price in terms of the current situations. Yeah, of course, you can short oil CFDs. For CFD, right? For CFD, you can either long or short. For margin, right, it's always 20%. So now we will be sharing we were sharing a screen about the Points website. So we will show you how to find the US and UK oil product and to see how to see the margin and how to trade. Yeah, give us some times. We are opening the Points platform. Then later we show you the trading page. So it's you log into your Points, right? Then under the Points tag, you go to price LP1 or LP2, then under CFD, so you will be able to see the UK oil, USD1 or USD100. Then you can either buy it means you are trying to long this contract, or you can also short. Short is you are trying to short this contract. So for the UK oil USD1, right, you can see the margin, the gross contract value is the current price. Then the margin requirement is the 20% of this. Yeah. So you will be able to see how much margin you need to pay for this one contract lah. So for long and short, there's different finance charge. You can also check under the trade pop-up. For buy is long, for sell is short. Yeah. So for the 100 CFD, right, you can see the value is actually 100 times of this. Then the margin requirement is a 20% of the gross of the contract value. So you'll be able to see for current UK oil USD 100 CFD, if you want to long this contract, you need 1,855.64 Singapore dollar as your margin. So this is your margin requirement. So you can either for us, right, for us we provide either small contract or big contract. So you can choose to trade the small, which is USD $1 CFD, or you can trade the USD 100 CFD. I believe this demo will give you the brief, will give you a little bit, will make it more clear for you guys to see lah. So here actually is the Oil CFD promotion page. So you can, later I will show the QR code again. So when you scan, right, you will be able to see all the promotions and about the product here. Yeah, so you can also open a trading account in this website. So when you open the trading account, you can use a SIM pass to open the account. Then it will be quite faster. Yeah, for more information, you guys can scan the QR code here. So if there's no any questions, right, we will end this one. We will end this in 5 minutes lah. Any other questions? Okay, actually, so trading time, right? It's not actually it's not 24-hour. The market trading hour it actually is Monday to Saturday for the daylight saving time, which is basically in US, daylight saving time is from 8 a.m. to 4 a.m. and for the daylight saving time is 9 a.m. to 5 a.m. So it's not 24 hours. Just let you guys know. Okay, so it's when you trade CFD, right? You can deposit your SGD as margin. But actually, when you're trying to short and long the contract, you are using the USD. So basically, if you have any deficit, right, when you end the contract, you can convert your SGD to USD to cover the deficit. But normally, for SGD, you can transfer into the CFD. You can transfer into your CFD account and use it as margin. Yeah, for the USD1 contract, right? Micro contract, this is one type of micro contract for the oil. And just now I have also shared about the Hong Kong market one lah. So the Hong Kong one is also another product for investors to trade micro contract, which is you can trade Hong Kong counter from one share using CFD contracts. Yeah, okay, thank you for spending your time here today with me. I hope you get a little bit more information from my webinar, and you can contact us or you can go through our website to find out more about the oil and other CFD products. And see you in the future. Bye.